data individually. So that's why what we will try to do, we will use fixed range volume profile in a way as session volume profile. Okay, so what I need to do is I just need to find out the volumes happened in the last session. So what we do, we just drag and drop from the first to the last candle on 5-minute time frame. Okay, mostly use 5-minute time frame only, don't experiment with it. Okay, sometimes it has a tendency to switch the per levels when you switch the time frame. I still haven't found the satisfying answer why does it happen, because the volumes are not going to change as per the levels. Okay, so I'll just show you here. If you see, this is from 9:15 to the 3:30 3:25 candle. I will plot it. Let me just default settings. Okay, so this will be the, these will be, sorry. Okay, so these will be the default settings when you plot it. Okay, now what actually happens is that, look at this. If I plot a line here at the point of control, okay, so when you change to the 15-minute time frame, sometimes it changes. Okay, so it has this kind of glitch, or I don't know why this happens, why the these levels change according to the time frame. I don't know that, but this is the reason I will recommend to you stick to the 5-minute time frame for all the levels that you are going to get for the volume profile. Okay, so this will the basic presentation of the volume profile, or with the default settings that you will get in the trading view. Okay, so what we have to do is we have to plot these volume data for every day. This activity you have to do if you are using a free version. This activity you will be needing to do for the for at least once in a month. Okay, it will hardly take 2 to 3 minutes. Okay, you just have to plot these volume profile data every day on every expiry. Don't use continuous futures chart. Okay, always use monthly charts like this. This is what I do every month. You will see this is my chart. Okay, I have plotted all the volume profiles for the required period. Okay, you don't need to go back because all this data will be covered in this range. So until from this to this, I have plotted this. Sometimes these glitches will happen because it will take some time to update. So don't worry about it. Okay, so this is what you have to do. Let's go back to the continuous chart so that we can understand there from the basics. Okay, so as you can see, I have plotted the volume profile here. You will see the data as volume bars and the some point of control, that is a red line. Okay, so with basic common sense, anybody can say that this point of control means where the highest number of volumes are traded, the level where the maximum volumes are traded for the day. That is a point of control, meaning this is the level where the most buying and selling activities happen during the entire day. Okay, so how to use it, we will get to the part in later in a while. Okay, so first of all, let's understand what are the input elements of the volume profile. First, you will see these volume nodes, bars, volume nodes, whatever you can call it. Then you will see this point of control as a default setting. Okay, now you will notice, let's hide the price section so that we can read the chart better. Okay, so you will see this volume bar as it is. Now you will notice there is a slight difference between colors of the volume bar. Some is in a dark color, some is in a faint color. Okay, so why does this happen? As I mentioned, it denotes the value area of the volume profile. Okay, so this is the value area you will get from this high to this low, meaning on 20th June, Bank Nifty futures have traded the most in this range for the day, or majority of the buying and selling, majority of the volume activity happened in this range only. Okay, this is the rest of the area. Okay, it doesn't mean it is the it is not the important area, but throughout the day this area is more useful for us, because buyers and sellers will not respect this is the area where the less activity has happened. It will always respect the activity where major buying and selling has happened. Okay, that's why it is called the value area. You don't need to plot the lines manually. What you need to do, go to the settings. You will see in inputs you don't have to change anything. Okay, 24 is the row size. It just changes the number of volume bars. Okay, which again makes it difficult to read the data or increases the noise. Keep it is at as 24. You will see value area is always at 70. keep it as it is. Do not change any settings of the value area, okay, or the inputs. Just go to the style. Here we need to change some design settings, okay, color codes and everything. Make according to your own choice. There is no recommendations. Only one recommendation is turn on this value area high and value area low, so that you will automatically get these lines plotted on the range that you have selected. So you don't have to plot these lines manually. Okay. Apart from that, what I do is I just reduce these volumes or tone down these volume colors a bit for my settings. Okay. I keep this 10, 10 and 25, 25 for the darker, so that I can read the price action as well. Just a second, I'm getting call. Okay. So this is what these are the settings that we do, and just click on OK. So next time, every time you will plot the data, you will get this kind of a settings. Okay, now, so let's talk about this value area. As we all know, the 70% activity happened throughout the day, it will be considered as value area. And in that 70% will always be the level where the majority of the volume activities happen throughout the day. Meaning, or in other words, highest number of volumes are traded throughout the day, and that level will be called as point of control, which will be plotted in this red line. Okay, and this is like a magnet to the price. Okay, so the out of all the understanding of the volume profile, the only pinpoint is the volume profile. Okay, so sorry, point of control. So what happens in the point of control is that it acts as a magnet. So I will try to make you understand here in a terms of a simple analogy. Okay, so as we all know, the sole logic of a market profile, according to the J. Peter Stadelmeier, the inventor of the market profile, is that he says the market moves up to find sellers and market moves down to find buyers. That's his ideology, or that's what price action tells. Okay, this is how the market moves. Okay, because without buying there will not be selling, without selling there will not be buying. Just like without, or in terms of the economics, without demand there won't be a supply, without supply there won't be a demand. Okay, so this is what the volume profile gives us, the point of control. Now why does it act like a magnet? Let's understand using the simple analogy here. So I'm going to use the analogy of the bigger players, the institutions, or the smart money as we like to call it. Okay, why smart money? Because these people, they are the ones who create the price action, they are the ones who move the charts. Okay, now let's understand. This is the day on the 20th June that the bank nifty has traded mostly around the 52,630 point level, or majority of the buying and selling is placed here. Right now, what we can get here from this data, meaning I know this is the actual level. Okay, these are in terms of the volume profile, this is where the actual open positions are existed. Okay, at this level, not average closed position as per the VWAP. VWAP gives us the similar data, not same data, similar data. VWAP gives the level where the VWAP is closed. That's where the average level is traded based on the average volume and price. Okay, where the VWAP is closed, that level is where average volume and average price is traded throughout the day. On the other hand, as per the volume profile, the point of control is where the majority of the open positions are existed. Okay, as we know, not everyone is an intraday trader in the market. Intraday trading is hardly done by very few people. Okay, these institutions, they like to carry forward their positions on the bigger capital. Okay, as it is the futures chart, we understand using the future perspective. Okay, let's put it in the terms as the big money. Okay, let's say I am a big player. Okay, I have to deploy some kind of, let's say, 1,000 crores rupees in the market for today's session on this day. Okay, let's say I have a capital that is 1000 CR. Okay, now what I'm doing here is that in that 1000 crore rupees, I want to create positions in the market. Okay, what my positions are, I want to buy in the market. My view is market is going to up from this level. So throughout the day, I will keep on adding my positions, but on the single day only, my entire capital deployment will be hardly 20%. That is 200 CR. Okay, so 200 crores is going to deployed by me for the day. Now, as we know, the market traded somewhere here for the day and then later started to fall down. Okay, so these buyers started to deploy their positions when the market, when they are getting the price at the lower level. Okay, so this is where they started to deploy their position. They started to buy here. All right, that is from 20% of their entire capital. Along with that, it is not just me. If I have 1000 crore capital and I'm just one single institution, there is hundreds of other small big institutions are present in the market who are trading actively. Okay, so there will be more than 1 2 3 people or the big investors are interesting. Some may have 10 crore, some may have 100 crore, some may even have 10,000 crore rupees. Okay, and their deployed capital might be in the range of 2,200 to 2,000 crore per day. Okay, we don't know for sure that. Okay, all I know is that I am deploying my 200 crore, and 200 crore is not a big, is not a small amount as per the retailers, or it is more than enough even to move the market. Okay, to create a demand and the supply in the market. Okay, at least a small dent. Okay, or invite some more buyers. So with this amount, anybody can influence the demand and the supply to invite other players as well. This is a game. This is the economics. Okay, it doesn't fall into the manipulation. It is a basic. All right. So according to that, these buyers, they have implied their position. They have applied their position at this level. Okay. Now they have bought this Bank Nifty futures at this level. Now, as we all know, it is a zero sum game, and in market, in any market, you cannot buy without anybody selling it to you. Right? So if these buyers are buying, there are same amount of sellers standing against them. Okay, meaning on the downside, same amount is ready to be deployed by sellers here. They are selling with the same strength because they are buying with the same this much strength. Okay, all right, so now they have created their position. Now all they need to do is wait for the future price action, upcoming course of price action. Okay, nobody knows where the price is going to go. Okay, some big players can even influence more the price action and they can take their price in their way. Okay, up beyond them. All right, now as these buyers have bought and these sellers have sold here, next day, let's say what happens. Next day, the market opens gap down. Okay, now both people have additional 80% of the fund to deploy in the market when the price goes in their direction or against them. Okay, now as the gap down is happened, these sellers are benefiting the profits. Okay, so what they will do, they will keep on adding their additional fund as a pyramiding. They will keep on selling more and more to create more supply, to invite more sellers. Okay, now at the same time, if these people are fighting, if these people are adding to their profitable positions, these loss making buyers will also start to firefight. Okay, and in the market, most of the time, the people who are on the losing side are the ones who firefight the most. They dominate the market. Okay, because nobody wants to be a loser in the price. Nobody wants to be a loser in terms of the finance. Everybody wants to be wants to be profitable, right? So if the sellers are making profit, these buyers who have additional 800 crores, they will start deploying their funds here at the lower level. They will keep on adding demand at the bottom, from the bottom. They will try to buy here more and more. Okay, and if they are getting successful in creating demand, the price will go up. If they are not succeeding, the price will